right, guys, Bruce here with Bullish Currency. So today we're gonna go over a couple of different candlestick patterns that I use that are basics as well, right? I call it basics because most people learn a lot of this stuff in the beginning of their trading careers anyway, when it comes to candlestick patterns. So we're gonna go over a couple of different ones. Now, the first one that I want to go over, the first two, I guess you could say, are M's and W's. Okay, M's and W's. M's and W's. All right. So the market is always going to form these little W's and these M's, right? And they're not always going to be perfect, right? But they're going to form these W's and these M's, right? Pretty much over and over again. Okay. They're going to keep forming M's and W's, okay, over and over again. I'm going to draw some here so you can start to see what I see. But they're constantly coming and developing and creating M's and W's. Even this one right here, is a small little M, right? It makes a little M, right? Now, I'm just going to draw as many as I see real quick, just for you guys to have as reference. They're very, very common. You know, you see M's and W's all the time. All the time. Okay? All right, so we'll just work with those for now. Okay, we do actually have a small little one actually right next to it. You have a small little one right next to it. Okay. All right, so M's and W's, M's and W's, M's and W's, you're going to see them reoccur no matter what time frame you're on. You're going to see candlesticks when they're moving up and down, which is, the candlesticks, that's the price, that's the value of whatever you're looking at. In this case, we're looking at the British pound, the US dollar. And M's and W's are a very common pattern. Now, they're very, very simple patterns too. A W pattern is an indication for a potential bullish move, right? Potential upside move, okay? Or move to the upside. And M is an indication of a potential move to the downside, a potential bearish move, right? They're very, very nice, simple, easy to see, easy to understand confirmations for up or down. Now, no matter what you learn in Forex, no matter what it is, it's always, literally always, to teach you one or the other. Is it going up or is it going down? That's it, right? So W's are telling you it might go up, and M's are telling you it might go down, right? So right here is just a little example of finding a couple of W's. Now, me specifically, right? You guys learned about breaks and retests. You learned about all that stuff, right? And you learned what a break is. So me personally, when I see W's, I like to look at it as a little resistance level there as well, right? So automatically, when you create a W, you see the little point of the W that my mouse is hovering over, the little point. You could essentially kind of draw a line there, and that's kind of like that is a resistance level. It's a mini resistance level, because as you can see, multiple times it came here, touched twice with two candles and dropped. Same thing over here. So that is a resistance level. That used to be a support level. You guys learned this in the last video. So as you can see to the left, it used to be a support level, right? It broke through, came, retested, dropped, broke back up, broke back through, right? Respected it again and broke back through. The cool thing is that when it finally broke back through this resistance level, which you guys already know, when it breaks a resistance level, that's a confirmation for up, right? For bullish movement. Well, guess what? When you get a W formation at the same time and it breaks the same level, right? This candle right here is a clear break of this whole entire level here. What happened? It actually continued to the upside, and just being able to predict the direction is what makes you money, right? We know that. It's just about predicting the direction, okay? Now, same thing with the M's, right? If you see an M forming, it's going to create a little mini resistance, a little mini support level, floor level, where the M tip touches. So right there. So now all you would wait for is for the M to fully form and actually break through that level. And as you can see, to the downside, obviously, because M's are what? When you see an M, or if you think it's an M, you're thinking bearish, you're thinking down. So as you can see, this candle right here actually broke through this level, closed on the other side the way it's supposed to, because without the close, you can't tell if it's a break or not. You got to wait for the candle to close, right? You guys learned that in the last video. Boom, it broke, and what happened? It continued down. Okay, guys, it happens over and over again. Okay, so we can use the same. We can make another line. Look, it formed a big awkward M, but nonetheless, it's an M. So you would come there and you could draw your little line right on the little support level that it created on this M tip right here. And what happened? It broke. And what did it do after it broke? It dropped, but it also came back up and retested one time before dropping. The continuation, right? Even came back and gave you more entries, more retest to get in for more bearish moves, right? Just being able to predict that. You guys learned about break and retest in the last one. Now you're combining it with M's and W's. Okay, so let's see if we can find another example of a W, right? W's typically start to show up when the market's about to reverse and go to the upside. M's typically pop up when the market's about to reverse and go to the downside. All right, so I'm looking for a nice W for us. I mean, there's a W right there, basically, right? And I mean, it's a little W right here. Look at this, right? It's a little W right there. Okay, same situation, right? You would draw a line right on the tip of your W. And look at that. Used to be a support level, right? And now it's a W, so it's your resistance level. And what happened? It broke back through multiple times. And even till this moment, you would actually be in profit because you would have saw that it broke a resistance level and formed a W. That is confirmation for it to go to the upside. And boom, it starts to push to the upside. Okay? So the market can be predictable. You just have to understand basic patterns. See, what happens is some traders get involved, but they try to skip through the basics as fast as possible because they believe that if they get to the advanced stuff, they're going to start making money faster or something. But in reality, you really just got to master these basics. Okay, so I'm looking for some more W's, right? So we got somewhat of a W like right here as well, as you can see. All right, we got a little W. Okay, and then as you can see, if we zoom in, put the line right on our resistance level, the W, what happened? It eventually broke through and continued to the upside. It actually even came down once to retest. Look at that, right? Let's look for another M pattern. Okay, we got a somewhat of an M pattern. It's a little crazy looking, but it is nonetheless, I would say, kind of like an M. Looks like an M to me. I would actually, this would be acceptable to me. Okay, so now here you go. You would take your line and you would draw it right in the tip of the M, right? And look at this one, right? The candle broke. You got in. You had a headache, right? Because you had some drawdown. Now, normally you would put your stop loss. And by the way, drawdown means your trade's going into a negative. It's going the wrong direction. So that means, you're losing a little bit of money currently at that moment. But as you can see, after it did that, it eventually came back down, rebroke, retested, and then dropped massively for a massive, massive profit. Now, when you get into a trade like an M or a W, typically it's a double top or double bottom also, right? Basically the same exact thing. You could put your stop loss typically a little bit higher than the last high. So if you would have got in here, your stop loss could have been all the way up here. And guess what? It came here, but never came up there, and it dropped. Okay, so these are basic patterns, M's and W's, and they're all over the place. So now I want to show you another pattern. Okay, this pattern, all right, this pattern is called the head and shoulders. Okay, head and shoulders. Okay, so we actually have a head and shoulders right over here. Hold on one second. Okay, so right there, somewhat of like a sideways type of head and shoulders, but this one's actually an inverted head and shoulders, right? The reason why it's inverted head and shoulders is because it's upside down, right? So a head and shoulders pattern is you will see a head and you will see shoulders, somewhat, right? I know some people are like, what head, what shoulders, right? But so if it's upside down, this would be the head, because obviously just like my head, the shoulders are on the side, but the head is higher, right? So the head is lower in this case if it's inverted head and shoulders, and the shoulders should be about equal. And as you can see, these shoulders are equal. So when you see the first shoulder form and then the head form, and then it comes around and comes to the point of the height or whatever of the first shoulder, right? That's where you would be looking to enter the trade. If it's an inverted head and shoulders, you're looking to enter into bullish movement, into buys, into longs, right? So as I told you guys earlier, with W's, you're looking for longs, buys, bullish movement, right? Well, with inverted head and shoulders, you're looking for the same thing, bullish moves, right? So not only do we have W's here, guys, but we also have a sideways inverted head and shoulders. It might not be pretty. Some head and shoulders are pretty. This one might not be pretty. It's a little crooked, right? But it is two shoulders basically that came out to be equal length. So normally you would either have a buy limit order right here, or you would wait until you see it actually come to this area, maybe wait for some more candlestick patterns. Like you can see right there, right? You got a little somewhat of almost a doji looking candle followed by a bullish engulfing, which you guys learned in the last videos. And now we're putting it all together. You're starting to have aha moments, right? You got the inverted head and shoulders, you got the W's, you got the break, you got the bullish engulfing candle, you got the everything so far is looking bullish, 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 no matter where you got in. Whether you got in over here or after the bullish engulfing, you still made massive profits right away without any headache, right? This is what happens when you put the right confirmations together, but you're having a solid foundation of basics. Basics, basics, basics. So that's an inverted head and shoulders. Now we're going to look for a regular head and shoulders. Okay, we're going to look for a regular head and shoulders. You know what? This might actually qualify as a head and shoulders. Yeah, this is definitely qualifying as a head and shoulders. All right. So this is the head right here. Boom. We got this thing. Then we got the right shoulder right here. Okay. Now look at this. So when you see the left shoulder form and then you see the head form, what you're waiting for is for price to come up and form the right shoulder when you are utilizing head and shoulders patterns. You're waiting for it to create the right shoulder. So you would wait for it to come and form the right shoulder. You would either get in when you see it forming the right shoulder, or you would get in with sell limits if it's a regular head and shoulder by putting the sell limit price at the same height of the left shoulder. So whatever price that is, you can see the line, the price is right here on the right-hand side. Whatever price that is, that would be your sell limit. And then that way, it would activate on its own when it touches this level for a sell, right? Because if it's a regular head and shoulders, if it's an M pattern, we are looking for shorts, sells, bearish movement, right? So when you have a regular head and shoulders, it is confirmation for bearish movement. So as you can see, you have a head and shoulders form. When the right shoulder form, you could either got in here, right here, or you could have waited to see more confirmation. Like for example, you could have waited for it to form the candle patterns that we like. And as you can see, it did. It gave us a small little bull candle here, and then a bearish engulfing right there, and it dropped right away. Dropped right away, right? Now here's your other option. You have a very obvious support level right here, right? Touched multiple times right here and right here. You could either get in at the right shoulder, or you could say, you know what, I want stronger confirmation. I want to be a little bit more patient here. Let's wait and see if it breaks this support level as well. So it came down, and this candle is a break candle because you can see the body close on the other side of your level in the direction you are predicting. So look, it broke. You get in for the sell, for the short, and it dropped immediately and eventually even lower. So you see how you're starting to combine these confirmations. Things are starting to click, starting to make sense. So you got to learn how to identify these patterns, inverted head and shoulders, and the regular Head and shoulders. So I'm looking for another example for you, right? Because head and shoulders, you know, these patterns don't just pop up all the time. M's and W's more probably, definitely than head and shoulders, right? But you could definitely see a big W right there as well. I'm looking for one for us. Let's see if I can find another good head and shoulders pattern. But like I said, they don't really they're not just always available, right? We got lucky finding some in the beginning like that, but let's see if we can find another one. Okay, so I haven't seen another one yet. So you're not gonna see them all the time, but some people strictly trade off of just head and shoulder patterns. That's all they do. So I mean, it is a pretty effective pattern all by itself, but I like to combine it with other confirmations. I like to put things together. So you can see all the W's, you know, you can see the patterns already if you start getting used to it with your eye. All right, you see the W's, you know. Okay, here we go. We got a head and shoulders pattern right here, right? As long as it makes the left shoulder, and as long as it's a real head, meaning it's higher than the shoulders, that's all that matters, right? It always drops back down to the bottom. And then here we go. Boom. All right. So there we go. We got a head and shoulders pattern. Okay. Because the left shoulder was formed, the head formed a little bit higher. It's supposed to be higher than the shoulder. That's exactly what we got. So that's great. Came back down to the same support level that's been creating this whole time. Right. And came back down and then came back to form the right shoulder. Now you could either have a sell limit, right? Because when it's a regular head and shoulders, you're looking for sells, right? Bearish movement, right? So you could either sell at the top of the right shoulder, go for a short, or you could wait for the confirmations, guys. Did we get a bearish engulfing candle? Yes, we did. Could have got in right after that candle. Did we get a break of that support level? Yes, we did. You could have got in even there if you wanted to be even safer. So the patterns are there. You just got to learn how to recognize them. So what I need you to do, guys, again, is put in the hours. Trust me, put in the hours. Right now, it's not going to be so clear, but if you put the hours in and you keep looking at charts and candlesticks and looking for just these basic patterns, that's why I don't want to, you know, I just want you to focus on what I use, not everything, because then it'd be too much to focus on. Just focus on identifying head and shoulder patterns inverted both ways, M's and W's, and you will see how you start to feel when it comes to the market. You're going to get so confident, guys. And that's it for this video. I will see you guys on the next.